All right, good morning, everybody. It is 9:31 on this Monday, and I appreciate you all taking a few minutes to join us for this really important topic. I'm really excited to have David Felton from Cambridge Trust here to talk to us about banking strategies and ways to diversify deposits and all of that good stuff. Over the last week, I've had more conversations with people about FDIC insurance that I've probably had in my entire career. So this is certainly a learning opportunity for everyone, including myself, and a topic that 2 weeks ago you may have put on your risk profile as non-existent, and you were all taking time out of your Monday morning to hear about it. So obviously it's risen on your risk profile a little bit. I think David will also reassure us that there is no immediate threat. I don't think anyone should run to their bank immediately following this presentation and do anything. This is a time for planning and thinking about what your next step should be, and then putting that plan into motion. And I appreciate, and I'm sure David will back me up on this, that it's hard as a banker to deal with all of your clients all at once. So be kind to your bank and to your bankers when you're asking for their assistance. All right, without further ado, I will let David take it over. David, everyone should have gotten a warning, but this is being recorded and this meeting will be widely distributed. So just a heads up on that. All right, David, take it away.
All right, thank you, Brian. Good morning, everybody. And I agree, be nice to your banker. It's been a wild week and a half here. We understand the concern. My team, and so first of all, I'm David Felton. I'm Director of Relationship Banking at Cambridge Trust. So my team focuses primarily on working with commercial clients, nonprofit clients of all their deposit and treasury management needs. So what we're seeing a lot of, and Brian, can I share my screen?
You should be able to. Let me see if I can.
What we've seen over the last week or so is a lot of concern, obviously, around FDIC insurance. So I want to talk a little bit about that today. Really, Brian and I talked about this last week, so it's kind of an impromptu meeting here. But I want to give you some examples of I want to talk to you about what happened. What I think your bank should be doing when it comes to having conversations with you and maybe doing some relationship reviews. And then what are we utilizing currently in order to, for the best benefit of our clients and to kind of alleviate some concerns. So here we go.
David, while you're pulling this up, I would like to encourage everyone to enter your questions in the chat. We won't be taking live questions while David's talking, but afterwards, I will read off the questions that you put in there. All right, David, take it away.
Great. Thank you. Can everybody see my PowerPoint here? Yes?
Yes.
Okay. All right. So again, we're going to talk a little bit about the current environment, some tools that are available to you. I'm going to give you some real world examples of what we're doing with our clients currently, and then we'll get into more of a Q&A. So what happened? As we all know, clients are looking for safety and soundness from their institutions, given the takeovers of SVB and Signature. Banks do have, in most cases, additional FDIC types of products and more insured products that customers can utilize. In my opinion, in my team's opinion, banks should be educating clients and prospective clients in selecting products and understanding the rates associated with them. And then businesses and nonprofits are examining their holdings and deciding what to do, right? So I'm going to go into the next slide here and say a couple of things. So first off, the idea of saying, all right, we're going to take 250 and put it into this bank, and now we're going to move 250 into that bank. There are better products out there. We're going to get into that. One thing I would say is your bankers should be reaching out to you and doing relationship reviews. Let's take a look at your balances. What are your concerns? What are the products and services that you have? If we make changes, how does that impact maybe the pricing or the structure of your relationship? So we do that on an annual basis with most clients, with the majority of clients. But now, as you can imagine, we're doing them very often. On top of that, Boston Private, which was purchased by SVB in 2020, I have 2 people on my team who were there for 2 decades. So we're getting a huge inflow of a lot of folks. So we're trying to alleviate their concerns and get them up and running very, very quickly. Onboards that might take 4 weeks are taking 4 days now. So hence my sickness and my raspy voice here from the last week and a half of running into it. So first and foremost, a lot of times people believe deposit insurance fund is a safe haven. Something I always tell folks is DIF sounds great, but DIF has about $500 million in assets. So what that means is if you have 2 or 3 small banks go down, DIF could be used up. So really what you want to do is make sure that you are at a strong, stable bank. You want to be able to pull annual reports. You want to be able to look into the financials and the liquidity of those organizations. So make sure that you're talking to your bank about their liquidity position. You're looking at their annual reports and you're getting comfortable with their financials. DIF is not always that safe haven. There's also a tool which I would suggest, especially for an individual, so a consumer. You can get additional FDIC insurance on your accounts using what's called the Eddy tool on the FDIC, and right there is the link to it. So, and I can send this to Brian after to pass along, but utilizing this tool, you can set up your accounts in different ways by adding signers, different beneficiaries in order to get additional FDIC insurance on your consumer accounts. So the real reason why we're here, what are we using on a daily basis and talking about on a daily basis? Insured cash sweeps and CDARS, primarily insured cash sweeps. So what this product is it is by a company called Intrify out of Washington, DC. And what it does is you set a target balance in your account at a bank at, let's say, $250,000. Everything above that is swept into the Intrify network to banks all over the country in $250,000 increments. So you get 100% FDIC insurance of your funds. So and I can only speak to Cambridge, but for us, and I'm assuming for other banks that have this product as well, your statement comes from your bank. You can see all your interest, everything gets reported by your bank. However, you can also have a login to Intrify so you can see what banks am I at? Prior to setting this up, you also say, hey, we have money at Bank of America. So make sure that Bank of America is not one of the banks that you send money to. So we get ahead of all of that. So I'll give you a couple of examples of what we've been doing recently. So, I have a client right now that I'm working with. They have $2 million on deposit. It's a nonprofit. They have $500,000 in their operating account and $1.5 million in a money market. They had concern. They wanted to do more with the FDIC insurance. So we do an additional analysis of their relationship, say, all right, how much do you need in your account to make sure you're offsetting fees? Everything above that, you can sweep out to the Intrify network. So in this case, they needed $500,000, but they were still concerned. They said, Dave, we want full FDIC insurance of all funds. So their choice was keep $500,000, sweep 1.5 in $250,000 increments, and you earn interest on that, right? And don't pay fees, or keep 250. You pay, let's say it's $100 in fees a month, and everything above that will be swept, and you get full FDIC insurance because you have 250 with us and 250 with the other institutions. So that's what we're doing a lot of. And I could give you varying types of examples, but that is the most common conversation we're having. CDARS is another product where you can do it, and some people will do laddered CDs that go from 4 weeks all the way out to 5 years. The rates are okay, but CDARS are a very challenging product when it comes to getting set up and then unwinding. The great thing about ICS is you get it set up in 2 or 3 days, and it's liquid. So if you set your balance in your account, your operating account at 250,000, and you write a $500,000 check, it comes out and it just pulls from the ICS network automatically. You don't have to think or do anything with it. CDARS, obviously, you're locked up in those specific timeframes. So again, just kind of talking about what FDIC insurance is, what it covers. So it's covering more the savings account, the now accounts, money markets, CDs. It does not cover anything like stocks, bonds, mutual funds, life insurance policies, annuities, municipal securities. So let me just kind of get what sort of questions do folks have? Or what are you seeing, or what are your concerns?
All right, everyone. Thank you, David, for that. Let me check the chat and see what we have for questions. I'm going to reclaim the host. All right, everyone. David, I want to just recap. David just went over a variety of strategies for how to reduce deposit risk. CDARS and the ICS sweep accounts being the two primary ones. There were also a couple of things he touched on about what is and what is not insured under FDIC. Do we have any other questions? We do have a couple of questions coming into the chat. David, can you explain ICS in a little bit more detail? Like,
Absolutely.
Technically, how does this work? Where's the money going? How is it gaining FDIC insurance? Kind of just like step us through that a little bit.
Yeah, so there tend to be a lot of questions around this because it seems like such a phenomenal product. Why hasn't my banker talked about it before? Well, the reason being, in the past, these concerns really weren't heavy, and we're in such a low rate environment. ICS products were earning zero. So how this product works is you open an account at your bank. Could be a commercial checking account. You could do it right from your operating account. And you set a specific target balance. So you say, all right, I want to keep no more than $250,000 in my account. You fill out a form for the IntraFi network. So IntraFi is the company that owns the insured cash sweep product and CDARS. And once you're up and running, you designate, hey, we have accounts at these other banks. We take those banks off the list. So then if you've got, 2.25 million, you have 250,000 in your operating. The 2 million will then get swept on a nightly basis into the IntraFi network, the ICS network, to banks all over the country. And you don't have to set up accounts with those banks. It's done all automatically for you. And you can write checks as you always do. It just constantly pulls back and forth from the IntraFi network. Does that make sense?
David, can you say a little bit about, it sounds like an obvious solution for many people, but what is the downside to just, let's say I have lots of time on my hands and I'm considering walking around town to opening bank accounts at all these different banks. Like, what am I gaining through that effort versus what am I, losing with ICS, if anything?
Yeah, you're wasting a lot of time. Unless, well, I shouldn't say that, because at the end of the day, listen, I'm the treasurer of Boston Arts Academy Foundation. We have funds at different banks because they give us money. So obviously we'll set up different accounts at different places. So if that's what you want to do, that's obviously an option. You can absolutely do it. ICS essentially takes that away from you. So you'll get one report from one bank outlining all the interest that you've earned. You can see it on your online banking, a summary of what it is. And then you also can get a login for IntraFi to go in and say, all right, what banks, you can see all the specific banks that the funds are at that time as well. But to go to each different bank and set up accounts, it's a huge use of time. Now you've got to track multiple banks. You're getting multiple statements. You need to make sure that especially as we know, as board members change, as personnel change, now you have to go to all these other banks to redo the paperwork, where in this case, you do it at one bank.
And of course, if you don't have the benefit of that sweep function, and so if you do write that $500,000 check, you of course have to manually move the money around, which is itself cumbersome.
Exactly.
I'm taking questions a little out of order to sort of stay on topic here a bit, but do all banks offer this, David?
No. You have to sign up for this as a bank. We actually didn't even have it until 2020 when we merged with a small bank called Wellesley Bank. They had the products and we've utilized it. I've used it throughout my career. I spent 9 years at Rockland Trust. We had this product in my last 2 to 3 years over there. So it's been around for probably 2 decades. But again, the concern around FDIC insurance, mine is going back to 2008, hasn't really been a problem recently. And then in the low rate environment that we were in, people found I can go in a money market and get, back in the day, it was, let's say 1%. And if you were in the ICS network, you maybe were making 2 to 5 basis points.
So talk to me a little bit about that point, David. The FDIC insurance of $250,000. Now, is that for only my checking account? Is that for every individual account I own? Like what falls under the $250,000 umbrella?
So it's per entity. So if you have ABC nonprofit and you have a checking account with $500,000 and a money market account with $2 million, you still only have $250,000 of FDIC insurance, which is why the ICS product helps to alleviate a lot of concern. I mean, I'll be honest, I have a for-profit client of mine that has significant balances with us. So they have 5 million in a money market, 4 million in operating. They're very concerned with the market. They know we're strong, but they want to make sure they're covered. So they were willing to just keep 250,000 in their operating account, sweep everything else, but they pay $450 a month in fees. But to them, they're paying for an additional insurance in their minds.
Yeah. So I think there's a good question here from, you and I, David, deal in this world, you more than me, but both of us more than most people, I would say. And I think perhaps we should talk about, can you just say, I mean, you've been inferring what a sweep is, but to clarify, a sweep is the literal movement of money out of the bank to another bank on a nightly basis in order to adjust the banking account to the balance you designate.
Correct.
Did I correctly define what a sweep is?
Correct. Exactly.
Great.
And again, this is all automatic. So you don't have to do, once it's set up, it's kind of a set it and forget it type thing where you can view a summary of it on your online banking. You can see the account balance, but it's all done automatically.
Great. And ICS, I'm getting questions about, like, people are intrigued, I think, by this. It seems so simple, perhaps. Who manages ICS? Like, what is ICS? Is there like a computer out there doing this? Is there a person out there doing this? Like, what is it?
Yeah, so it's a company called diversify out of Washington, D.C. They own the product. Prior to that, it was Promontory that owned the product, or I think diversify took them over. So it is just a separate company out there that's built this in conjunction with the finance industry for these types of concerns that do come up.
And so it's like a membership, sort of, right? With each bank. Each bank pays to be part of this, I assume. And then
exactly.
And then you agree to receive deposits as much as you're sending deposits out. Is that more or less the right way to think about it?
So that's another reason why they built it that way. So sometimes the problems when you have different, let's say, brokered products, is it goes off balance sheet, which can sometimes negatively impact the bank. What this product does is every dollar we send out, we get reciprocating dollars from the diversify network. So all banks within the network benefit, as well as the customers benefit from the added FDIC insurance.
Yeah, that's cool. If a bank does not have ICS, David, and you don't want to leave them, well, perhaps you should consider reevaluating the relationship anyhow. But like, let's just say you really don't want to leave your bank that does not have ICS. Is there anything to be done there short of manually moving money to a different bank?
Talk to your banker, figure out, are there any other products? Also, like I said early on in the call, understand your bank's financials and don't always trust in, I mentioned this earlier, some folks jumped on that after, don't always trust in the deposit insurance fund. DIF's great, right? It's a great product to have. However, DIF has assets of $500 million. So if there was a catastrophic situation and you had 3 or 4 small banks that utilize DIF go down, then there's only $500 million to make those clients whole. After that, it's that fund is used up. So you want to make sure that you have line of sight into the liquidity and the financials of your bank. Ask for annual reports. So I'll tell you right now, my CEO and CFO are jumping on calls with our clients, with boards to say, hey, can somebody jump on and just let us know? We just want to feel a little bit better and ask some questions. So your bank is likely willing to do something like that.
This is great information, David. I'm just taking a minute to scroll through the PowerPoint you prepared. Would you be willing to share that with this group?
Sure. Absolutely. Absolutely. I'll send it over to you after this. And I saw a question up there around FDIC insurance, if they're going to raise it. They should, especially for regional banks, those smaller banks, that FDIC insurance. We were having a conversation meeting about this last week, saying that we should get more, some additional above and beyond, because what's the worst thing that's happening right now? What a lot of small banks are seeing are folks are running for the big banks, the B of A's and the Cities and the Bank of Americas, where where were those folks in a lot of cases during PPP? And I don't like to speak ill of any other banks, but what you don't want is a monopoly where you have 4 major banks in the country and no local players that understand your business, and can help customize products, services, and your relationship to best benefit your organization. And those big players don't tend to do that. So that's why my bank is very fortunate for the fact that we are being looked at as a safe haven from a lot of these SVB folks, but folks are scared. They're concerned right now. I get it, especially if you are at SVB. I understand. So any way that we can alleviate those concerns, like with a product like ICS or anything else, that's what we're here to do. I can tell you right now, on the consumer side, we deal with, we have many larger consumer clients, though my team focuses primarily on nonprofit and commercial, but many large consumer clients where we're going into that Eddie tool I told you about. And like I said, I'll forward this along so you can go online and check it out. And we're working with our client to say, all right, if you add your son to this, if you add your daughter to this, if you add your wife to this account, we can get you $750,000 in FDIC insurance. It's on the consumer side, not the business side. $750,000 in FDIC insurance rather than $250,000. So it's just a matter of titling of those consumer accounts. But these are the conversations that you should be very comfortable and have somebody at your bank that you can reach out to about.
And you kind of brushed past it, but probably the most common question I got all week last week was, well, my bank says they have DIF, and that's, I'm good, right, with DIF. And I think, it's what you said there is helpful to conceptualize, like, what exactly is DIF covering, and, I think you said it right, it's 3 or 4 small bank failures and then it's done. And, we had 2, last week, right? So,
I'll say this too, take this as an opportunity. If it's been a while since you've looked at your banking relationship, now's the time to call your banker and say, hey, can we do a review? Let's talk about what we have. Because the other thing is, if it's been a while, there may be some new products out there. So there's some great fraud prevention products that a lot of nonprofits that we tend to see coming from other banks don't use or haven't heard about. And that's a problem because fraud's growing when it comes to finance. So having those tools available to you and doing those reviews, this is a good time to do it. And also you can look at pricing. Are you getting the best rate? If they have ICS, what are they going to offer you? Understand this: when you do go into an insured product like this, in most cases, so for example, we don't charge a monthly fee for it, but the rate tends to be less. So you're sacrificing a bit of rate for security, right? So for example, we could have a product rate out there right now. I think we're at 4.75% for on balance sheet money market. Well, folks want ICS. So bringing them on board, the rate tends to be less.
See, the last question, and then we're gonna probably call it after this one, but I think it's an interesting one. What did it look like for SVB customers in the wake of their receivership? Were they able to process the accounts in the normal online portals? My thought is that they were not able to do anything normal, but I don't know, David, if you know more details about that.
It was chaotic, and it's still challenging. It's gotten a little bit better for them, but I can tell you, when they went down on Friday, come Monday, when they opened the doors, there was a line of about 120 people because they couldn't send wires. They couldn't access their online banking. The only way they could get money out was to get a physical check from the offices. So my team from that Friday to now has been working day and night through the weekends, trying to assist with account opening. So we had all these accounts open in the first few days. They didn't even start funding until late last week in a lot of cases, because that's when people were finally able to start getting out there and getting larger dollars from their accounts.
And also, we MPCM with our clients, SVB bought Boston Private not too long ago, and there were a decent number of clients of ours that had bank accounts with SVB. So we saw this on a ground level scenario with bank accounts that were frozen, unable to process payroll that week. This was a significant operating issue for some of our folks, and for many of you actually who use MPCM for bill pay. Bill.com was drawing off of SVB that week. They use many different banks for many different reasons, but a number of checks out there in the world were drawn off of SVB. So it was kind of an interesting week for us as well. All right, everyone, we are coming to the end of our time together, and I know this has been quickly put together, but very informative. Thank you, David, so much. Thank all of you for taking time on what I'm sure is a busy Monday morning to listen to this topic. This information will be made available to you, both the recording and David's slideshow. When I email this all out, I will include David's contact information, which is also in the slides. So don't hesitate to ask him. David is my go-to guy with banking questions, and he will not hard sell you, just give you some information. So
yeah, exactly.
Thanks again, and I will see many of you around this week. So have a good one, and we'll be talking soon.
Thanks, Brian. Thanks, everybody. Take care.